Good afternoon, everybody. I'm Doug. This is Sean.
All right, Doug. So today we'll get straight to the point with how can I buy a house with a cosigner?
Right.
And what does that entail? So just tell us, what is a cosigner and can you buy a house with a cosigner?
Yes. Okay. So the problem is that I found a house. I like it. I thought I could afford it, but the mortgage company says, sorry, I don't make enough money or I have too many debts.
Okay.
And when they say that, what they're referring to is your debt ratio. So they take your debts divided by your income, and if that's over a certain ratio, you don't qualify, you can't buy the house, or you can buy the house, but you can't get a mortgage.
Right.
So what we want to do is there any other way I could maybe qualify? Okay. Other than getting a big increase in my income or chopping off some of the debts. And that is a possibility if it's some debts that you can do away with in a quick period of time to be able to still get this house. But short of that, there is another alternative, and that's called a cosigner, and that's where you get another person, and usually it's a relative. Okay. And I'm sorry, I don't know if you can get a friend to do this. I really highly don't. I think this is not possible. You have to have a relative to co-sign it. So it would be a brother, sister, father, mother, son, or daughter.
Some type of
blood relation.
Blood relation relative. Okay.
Then what they do is they take that person's income, add it to yours, but they also take that person's debt and add it to yours. Then they recalculate the ratio, and if you fall in the guidelines for the ratios, as if you were just buying the house yourself, you now qualify.
Okay.
Okay, so then what happens is you get, when you buy the house, you sign all the mortgage documents, and so does the cosigner.
Hence cosign, because they're signing the mortgage.
They're signing along the promise to pay along with you. So if you don't pay it, they have to be willing to step in and pay it for you. And so that's why sometimes it's hard to get a cosigner, because we all know that you're obligated. That other person is also obligated to pay the debt back.
So, for example, I think one of the risks to a cosigner would be if the person who's living in the house stops making the mortgage payments, you're still on the hook, and your credit could potentially be ruined. Even though the other person, the bank will just request the payment. It doesn't matter who doesn't make their part of the payment. The bank just says the payment's on time or it's not, and so you could be on the hook for the whole payment if you want to keep your credit.
So you have to make sure that that's a pretty good relationship that you have, so those things wouldn't happen. Okay, so there are two types of mortgages basically that most of us use to buy a house, a conventional mortgage and a government insured mortgage, a privately insured mortgage or a government mortgage. The problem with private mortgages, we'll call those conforming loans, is that you have a set of guidelines that are out there. And right now there's basically two institutions that have the guidelines. One is called Fannie Mae. You maybe have heard that in the news over the last few years, and Freddie Mac. Fannie Mae will not allow a cosigner. So the mortgage lender who you're working with has to be able to follow the guidelines of Freddie Mac, because they're going to sell your mortgage to Freddie Mac at the very end when it's all over and done with. Okay. So they have to follow those guidelines. And one of the guidelines is with Freddie Mac, is that you in essence have to have 20% down payment. And that's because...
Only when you're doing a cosigner?
Yeah, when you're doing a cosigner, you have to have 20% down payment, and that's because if you go under 20%, then it's privately insured, and currently there aren't any companies, private mortgage insurance companies, that are willing to do a loan that's cosigned that's less than 20% down payment.
Okay, so you could get a privately insured mortgage with a cosigner if you had more than 20% or more. But that's like even a change from 3 or 4 years ago. It used to be you could do 5% down.
Right. Whatever Freddie Mac was willing to do, the private mortgage insurance company would just follow right along. Well, that's no longer the case. Okay. So the other alternative is to go with a government insured mortgage, and we call that FHA. Okay. And in that case, still the minimum down. The cosigner doesn't have to live in the property or anything. Neither does it on the other way. But and so you still have 3.5% down. And what happens is, though, if you can keep those ratios, if the ratios end up being low or within their guidelines, then you get the best interest rate. FHA will allow you to go into a higher debt to income ratio, but then your interest rate you pay on the mortgage goes higher because it's a riskier loan, so they have to charge more on the interest rate.
Okay.
So basically, yes, you can try to get a mortgage that way with a cosigner. Of course, the cosigner has to have good credit.
Right.
As
And
good as yours.
Good income to debt ratios and all those types
Yeah.
of things we talk about in other videos about mortgages and stuff.
Right. So there is there is another possibility we mentioned in the very beginning. If your debt's too high, let's say if you have a car payment. So maybe you could, instead of having a cosigner help you out that way, if the cosigner could help you out with paying off that car loan, like as in a gift. That
Right.
might be an idea. Now you no longer have that debt. Now you don't need a cosigner, and you don't have to obligate them to your mortgage.
And you could probably talk to a mortgage
Yes.
loan
Oh,
officer
definitely.
would help you decide what the best way to structure your debt and whether to do cosign on a home loan or help you with some other debts.
Correct. Again, this is for informational purposes only.
Right.
But it gives you a heads up on what some possibilities are. So then when you talk to your mortgage loan person, representative, you can check all the possibilities out and make sure one way or the other is the best way for you to go.
Okay, thanks Doug.
Yeah.
Appreciate it.
Okay, everybody, thank you.